Grammarly is a smart assistant designed to elevate your writing, providing real-time feedback and suggestions. It's a tool helping millions worldwide communicate more effectively and confidently. It meticulously checks spelling, grammar, punctuation, and clarity, ensuring your message is error-free. Ultimately, it's about making your sentences more effective and impactful. People use Grammarly for crafting professional work emails, ensuring clarity and professionalism in every message. It's also invaluable for polishing school papers, helping students achieve academic success, and even for refining social media posts, ensuring your online presence is articulate and engaging. Its main goal is to empower everyone to communicate their ideas clearly, concisely, and with confidence. Clear communication matters everywhere. It's the foundation of successful interactions. Whether it's at work, in school, or in personal messages, clarity is key to understanding. Grammarly is an essential tool for students striving for academic excellence, professionals aiming for career advancement, and even casual writers who simply want to express themselves effectively. It integrates seamlessly into your favorite browsers, Microsoft Word, and a multitude of other platforms, making it readily accessible whenever you need it. This ease of use and convenience is a big reason for its widespread popularity and adoption. Grammarly does far more than simply catch mistakes and highlight errors. It proactively suggests improvements for tone, style, and conciseness, helping you refine your message. Users not only fix errors and polish their writing but also learn valuable writing skills, enabling them to write better and more confidently over time. The technology behind Grammarly is powered by sophisticated and advanced artificial intelligence. This AI meticulously analyzes writing patterns, identifies areas for improvement, and provides relevant, context-aware feedback. It's much more sophisticated and insightful than a basic rudimentary spell checker. Grammarly understands the nuances of context and suggests impactful improvements that resonate with your intended audience. For example, it might recommend a stronger, more evocative verb or a clearer, more concise sentence structure to enhance readability. What once required the keen eye of a human editor poring over every word is now available instantly, providing immediate feedback and suggestions. Grammarly effectively bridges the gap between what you want to say and how you ultimately say it. By refining written communication and ensuring clarity, it helps prevent misunderstandings and misinterpretations. Whether it's a meticulously crafted job application designed to impress or a casual message to a friend, Grammarly ensures your intended meaning comes across clearly and effectively, leaving no room for ambiguity. This unwavering focus on enhancing expression and fostering clear communication is at the very heart of Grammarly's core mission. That's precisely why so many individuals and organizations rely on it as their trusted and indispensable everyday writing partner. Grammarly just made headlines, capturing the attention of the business and tech communities alike. By securing a massive $1 billion investment, a testament to its market position and future potential. This isn't just any funding, it's a strategic move that sets it apart. It's non-dilutive, a rare and highly sought-after move in the tech industry, showcasing Grammarly's strong negotiating power. The primary investor is General Catalyst, a name synonymous with smart investments and forward-thinking strategies. A top venture capital firm known for backing industry leaders and disruptive technologies. Their backing signals strong confidence in Grammarly's future and its ability to continue innovating in the communication space. This billion-dollar boost is a landmark achievement for Grammarly and the tech world, demonstrating the potential for growth and innovation in AI-powered communication tools. It allows Grammarly to expand and innovate, pushing the boundaries of what's possible in writing assistance and communication enhancement, without giving up ownership, maintaining control over its strategic direction and long-term vision. Non-dilutive funding means Grammarly keeps its current ownership structure, ensuring that the original visionaries remain at the helm. Unlike typical funding rounds where equity is exchanged, no new shares are sold, preserving the existing shareholder value. Founders and early investors retain their stakes, benefiting directly from the company's continued success. This is a powerful position for a company, giving it a significant aiming to lead in AI, allowing it to invest heavily in research and development. And communication technology, shaping the future of how we communicate and express ourselves. General Catalyst's involvement is especially notable given their track record of identifying and supporting transformative companies. Venture capital firms usually take equity, seeking a share in the company's future profits, so this flexible approach stands out, highlighting the unique value proposition Grammarly offers. It reflects Grammarly's maturity as a company and strong business fundamentals, demonstrating its ability to generate revenue and sustain growth. Companies with solid revenue and growth prospects are in a position to secure such favorable terms, showcasing their financial strength and market dominance. This deal isn't just about the money. It's a strategic alignment. It's about how Grammarly got it, demonstrating its innovative approach to business and finance. It sets a new standard for tech funding, proving that companies can secure significant investment without sacrificing control. The industry is watching with keen interest to see what Grammarly does next, and how this investment will fuel its future innovations and market leadership. So, what exactly is non-dilutive funding? It's a term you might hear thrown around in the business world, but its meaning isn't always immediately clear. Let's break it down. It's a way for companies to get money, plain and simple. More specifically, it's a way to get money without selling ownership. Imagine a company as a pie, a delicious pie representing all the ownership. Equity funding means selling a slice of that pie, shrinking the founder's share with each slice given away. Non-dilutive funding, on the other hand, keeps the pie whole. Founders keep their full share, maintaining complete control. Most startups raise money by selling equity, which is a common and well-trodden path, giving investors a stake in exchange for cash and a say in the company's future. As the company grows and seeks further investment, founders' ownership gets diluted with each round of equity financing. Non-dilutive funding avoids this dilution entirely. It often comes in the form of loans, grants, which are essentially free money, or revenue-based financing, money that must be repaid, often with interest, but no ownership is lost in the process. Think of it like taking a loan on your house, using the house as collateral instead of selling a room to raise funds. You get cash, pay it back over time, but still own the whole house, retaining all the equity. Grammarly's billion-dollar deal is a prime example of this. They get resources to grow and expand their operations, but ownership stays intact, remaining with the founders. This is particularly attractive for leaders who want to maintain control over their company's vision and direction. New investors who come in with equity often want a say in key company decisions, which can sometimes alter the original vision. Non-dilutive funding lets founders steer the company long-term, according to their original plan. They're accountable for repayment of the funds, of course, but control and decision-making authority remains firmly with the original founding team. This freedom and autonomy is a big reason why established companies like Grammarly choose this funding route. It's especially appealing for those who are confident in their business model and projected growth trajectory. Therefore, non-dilutive funding is a strategic choice, not just a financial one. It's a powerful tool for companies that want to scale rapidly without compromise or external influence. It's important to note that it's not always readily available to every company, but when it is accessible, it can be a true game changer for a business. Grammarly's strategic move clearly demonstrates just how powerful and impactful this funding option can be for the right company. For tech innovators, non-dilutive funding is a game changer. The biggest reason: control. Founders keep their vision intact without outside interference. Selling equity means giving up decision-making power to new investors. Non-dilutive funding lets founders pursue long-term goals without compromise. It also protects the value of early employees and founders' shares. Each equity round dilutes ownership, but non-dilutive funding avoids this. This means those who build the company keep more of the rewards. There's also less pressure for a quick exit or IPO. Equity investors often want fast returns, pushing for rapid growth or a sale. Non-dilutive funding allows for sustainable strategic planning. In tough markets, it's especially valuable. Companies don't have to sell shares at low valuations. This flexibility helps innovators keep building, even when equity markets are shaky. It's a smart way to fuel growth while staying true to the original vision. Grammarly's billion-dollar non-dilutive funding is a strategic win. Founders, employees, and early investors keep their ownership stakes. With this capital, Grammarly can invest boldly in R&D, new products, and global expansion. Leadership led by CEO Brad Hoover maintains control over the company's direction. No new equity investors means fewer conflicting priorities. This model is ideal for SaaS and AI companies with strong revenue. It's a path for scaling and innovation without the trade-offs of equity dilution. Grammarly's deal shows mature tech companies have options beyond traditional venture capital. It encourages others to seek funding that lets them keep more of what they've built. The result: a more founder-friendly tech ecosystem. General Catalyst provided Grammarly's billion-dollar non-dilutive funding. They're a respected venture capital firm with a track record of backing impactful companies. Their involvement adds credibility to Grammarly's position. Offering non-dilutive capital is a flexible, evolving investment strategy. It shows General Catalyst recognizes that mature companies need different funding options. For profitable companies like Grammarly, this founder-friendly approach is highly attractive. It could signal a broader trend among investors to offer more flexible capital. By providing non-dilutive options, General Catalyst stands out as a preferred partner for successful founders. This move supports sustainable growth and long-term partnerships. General Catalyst's investment is a statement of belief in Grammarly's future. It's a win-win for both parties. With $1 billion in non-dilutive capital, Grammarly is set to accelerate growth. A major focus will be advancing its AI capabilities for smarter, more helpful writing suggestions. This could mean hiring top AI talent, acquiring startups, or investing in powerful computing infrastructure. Grammarly may also expand its product line. Think specialized tools for legal, medical, or enterprise writing. The company can now experiment and build new features for teams and businesses. Global expansion is another priority, adapting Grammarly for more languages and markets. The funding will help with localization, marketing, and reaching new users worldwide. Attracting and retaining top talent is key, so some funds will go to competitive salaries and benefits. Strategic marketing will boost brand awareness and user acquisition. With these resources, Grammarly can scale rapidly and stay ahead in the AI-powered tools race. The company is poised to introduce even more sophisticated features. This investment ensures Grammarly remains a leader in communication technology. The future looks bright for both the company and its users. Grammarly's billion-dollar non-dilutive deal could reshape tech funding. It shows successful startups can fuel growth without giving up more ownership. Strong fundamentals and revenue open doors to alternative funding, even at large scales. This may push more investors to offer flexible, founder-friendly capital. As companies mature, they'll seek terms that protect their vision and control. Non-dilutive deals like Grammarly's could become more mainstream. It sets a precedent for other startups to negotiate similar terms. This is especially valuable for deep tech and AI companies needing long-term investment. The result: more diverse funding options and a healthier tech ecosystem. Grammarly's move could inspire a new wave of founder-driven success stories. Grammarly's billion-dollar non-dilutive funding is a milestone for the company and the tech industry. It lets Grammarly pursue ambitious growth without diluting ownership or control. This move highlights the rise of non-dilutive financing for mature tech companies. Founders can now maintain their vision and steer their companies longer. For the industry, it signals a shift toward more diverse, founder-friendly funding. Grammarly is now positioned to lead in communication technology, invest in AI, and expand globally. Expect even more advanced features and tools from Grammarly soon. This funding is a catalyst for innovation and a model for others. As more companies seek non-dilutive capital, the tech ecosystem will become stronger and more resilient. Grammarly's strategy could light the way for the next generation of tech success stories.